Hi, this is Zak Mir with the weekend edition of the US Chartbreakers here at Zak's Traders Cafe. It is Saturday, April the 5th. Starting with the S&P, which has obviously fallen off a cliff. We've had two unfilled gaps to the downside, very severe ones, after the gap close sell signal that we had way up at 66.55. It was commented here. We did have a slight rebound, a bear trap rebound after that, but obviously fallen off a cliff since then. The worst case scenario target was previously 52.20, and obviously we've shot down through that. We've got basically the floor of a broadening triangle that you could say was in place since last spring. Top line there in red, and the floor of the triangle projected to head down to as low as 48.50 before this market turns around. RSI at 23, oversold, deeply oversold, but obviously there could still be follow through. The other point to note, I suppose, is the way that on both Thursday and Friday, this market opened at the opened at the high rather, and closed at the low. Especially on Friday, there was a marginal difference on Thursday, and that suggests that there will be further momentum to the downside. And as you can see there, with the August support there around 51.30, an end of day close back above that would probably be the first signal that this market was able to turn around, even though we are having to factor in 48.50 as the target there over the next few days, even if this market then bounces back hard after that. Moving on to the Nasdaq, which was actually in a relatively worse position than the S&P. We fell out of our falling trend channel, which is always a nasty thing to happen, around 18,700. Two unfilled gaps to the downside rather, and we're also below the old August support there, around 17,500. The equivalent support line projection target here is 15,700, which presumably we would get in the next week or so if we continue to decline it in the same way. Otherwise, it may be the case that if there is a slight recovery or respite from the tariff woes, then 17,500 or an end of day close above that would be the first sign that we are turning around. But having to factor in 15,700 there on the Nasdaq. Moving on to the stocks, and actually we can take a bow with the first one, American Rebel, where the shares were up nearly 400% on Friday after being suggested as a potential turnaround situation earlier in the week. So obviously not getting much fan mail at the moment on these things, but the charting did work. It was also a bear trap island reversal, so gapping down there in the middle of last month and then gapping up on Friday, and looking for this market to get up to as high as $28.50, which is the top of that falling trend channel in place since the summer of last year. This stage only well below the resistance on the way down there, around $12.50, really delaying the upside scenario. And you can see that we closed well above the 50-day moving average, $17 at the end of last week. Moving on to Alumis, and here shares have exceeded expectations. We have pushed through the best case scenario target there at $8.20. Above that, we've got a fresh target as high as $12.30 or $40 even by the end of this month. And nice to see the shares close so well on obviously what was a very negative day at the end of the week. Moving on to Antelope, and here you can see that we've had a gap close buy signal there above $3.80. Above that, we can hold above that, then looking for the top of that falling trend channel as high as $7.20 by the end of this month. And ideally, we get a quick end of day close above the 50-day moving average at $4.68, something which, or an area which has actually been the barrier. So if you are cautious, then you will look for an end of day close above that 50-day line, given the bull traps we've had through that since the beginning of the year. On to a stock which I don't think I've covered before, which is Forward Industries, and here, beautiful rising trend channel, and obviously Friday's price action all the more sweet given what a bad day it was for the market as a whole. Here you can see that we've got a rising trend channel base there that's been in place since October, and the top of the channel there heading for $8.25, especially while we're above old resistance on the way down at $6.20. That resistance there from the beginning of February. Decent result here at iCore Connect, where the shares ended the week up 35% nearly. We have been looking for the stock to get up to as high as $9, which hopefully would happen by the end of this month, while we remain above the Thursday's closing area around $4.25. You can see there's been an RSI 50 rebound, and the 50-day line also rising well now off the lows. Another winner from a stock which is covered earlier in the week. In fact, it blew the doors off. The top of that rising trend channel, we're looking for $4, exceeded that, and now we're looking for the upper parallel of that rising trend channel from February last year, as high as $5.80, and looking for that by the end of this month. Obviously, that would just retest the old November 2023 resistance for that stock. Moving along to Netclass, and here, rising trend channel, potential rising trend channel heading to $14. That's valid while we stay above the 50-day line at $8.33. Not much charting data to go on, but at least we managed to close above that 50-day line and above RSI 50, suggesting there's still some gas in the tank as far as the upside, and potentially hitting our guesstimate of where the top of the channel is there at $13.80. Given a lot of coverage to Regencell over the recent past, and here it's a bit of a rocky ride, but recent support around $23, while we're above that looking for $40, which is the old resistance line projection target that we've had for these shares, and looking for that well before the end of this month. Best case, obviously, is a retest of $60 by the end of next month. Moving along to a stock which is new to us, which is SOBR Safe, and here, tough to see what's going on here, because obviously it's not been a great ride in the recent past, but we're counting on bullish divergence there in the RSI window to take the shares up to the top of that falling trend channel, $12 by the end of next month, and especially while if we can get a quick break of the 50-day moving average at $7.50. But at the moment, the longer we stay above the recent support there around $4.30, the greater the chance of moving not only to the 50-day line, but also the ultimate target there towards $12. UPC is next, which is otherwise known as Universal Pharmaceuticals, or Universe Pharmaceuticals rather, and here another stock which has not had a great ride, and another stock which also is giving the impression of being a rebound within a falling trend channel. Here you can see that we managed to bounce off the falling trend channel from February, and have been able to break above the old March support there around $3. The longer we stay above $3, the greater the chance of move towards $8 and the top of that falling February trend channel. Next up is US rare earths, which obviously should be rather popular at the moment, given China moves to ban exports of rare earths. You can see the shares gapped up well. They did fail at old resistance around $9.30, which is disappointing, but any dips towards the floor of the gap there around $6.80 can be regarded as an opportunity to get on board, especially with the bullish divergence and targeting up to the 50-day line at $11. Finishing off with Victoria's Secret, which I have to admit I didn't actually know was listed, but here you can see that it obviously is end of day or end of week close for the shares back above the March support there at $16.16. Above that, we're looking for at least the shares to hit recent resistance around $19 plus. Even if they fall back again, we're backed by bullish divergence in the RSI window, and looking for that to happen over the next week or so. That's it for me today. More updates early next week.